Hello and welcome back to Effortless Investor, the channel where we keep investing simple, realistic, and hopefully effortless. Now, if you're new to the channel, it's all about showing a realistic investing journey for everyday people. No Ferraris, no fancy suits, no mansions. Just an honest perspective about growing an investment portfolio bit by bit. In this video, I'm going to be running through an update of my Trading 212 portfolio, covering how stocks and ETFs have performed over the last month. I'll also be highlighting the dividends I've received for the month, so stay tuned until the end of the video for that, or use the timestamps in the video description if you want to skip straight to the dividends. So without any more rambling from me, let's get into it. As you can see, the portfolio in total has bounced back a little this month, which is nice to see after the game of chicken Donald Trump decided to play with the world's economy in April. That recovery has helped my portfolio inch just over the £1,250 mark for the first time, and hit an all-time high of £1,281 back on the 19th of May. Now hopefully this trend will continue as the All-World and S&P 500 ETFs still have some way to go to get back to their all-time highs. Dive into the EI growth pie, which is where the bulk of the investment goes and is all about long-term growth. These are the investments that I hope will climb the mountain steadily over the next 20 years. It has started to steadily climb back after the debacle that was the stock market in April, which has led to the pie now being back in the green, if just marginally. Now, if we focus on the individual holdings, as you can see, it consists of only 3 funds. Starting with VWRL, which is my FTSE All-World tracker, which gives me global diversification in a single ETF. It is up just 5% for the month, which again has brought my investment back into the green. I was able to pound cost average my investment last month, which has likely helped me nudge just into the green for this month. All funds in this pie do pay out a dividend quarterly, but the payments came last month, so nothing to expect income-wise for another couple of months. Moving on to VUSA, which is my S&P 500 tracker, which gives me some nice solid US exposure. Much like the VWRN fund, VUSA is also nicely up this month at almost 6%, which is a nice healthy recovery in my book after April. It is unfortunately slightly in the red for me still, but that gives me some opportunity to pound cost average my position again in June. The last fund in the pie is EQQQ, which covers the Nasdaq 100, so its focus is on tech-heavy growth. EQQQ has recovered really well this month. It's up over 9% in May, which is fantastic. That has taken in nicely above my average cost and has me up over 3% in total. Overall, I'm happy with how the pie is performing despite the downturn in the market, which started in February and continued through April. Like all investors, I'm just going to ride it out and use it to my advantage and pound cost average my positions in each ETF. I have faith that they are all going to recover and continue to grow in the long term. Moving on now to the EI income pie, which focuses on dividend income as well as growth. This one includes a mix of dividend ETFs and income generating stocks. I'm not going to go into too much detail on each one. Maybe we'll do a separate video on that soon. I'm going to focus for now on the overall growth as well as any that paid any dividends this month. Now this pie is a fairly recent addition to my portfolio, as recent as the end of March, but there is still some interesting growth. We can see that the pie is up by the barest of margins. That is largely due to the 2% growth or recovery depending on your perspective for this month. As you can see here, 2.4%. If we look at the individual holdings, we can see some solid growth from BAE Systems, which is up 17%. We've got British American Tobacco, which is up 5%. National Grid then at 6%, as well as Legal & General and Unilever also being in the green. Now, each of those stocks are classified as dividend aristocrats in the UK, meaning that their dividends have increased year on year for the last 10 years, I believe. They have all solidly grown over the past 3 to 5 years, which is why I picked them for this pie. As it's a new part of the portfolio, it's too early to judge its performance, but I do intend to continue to invest and improve my positions in each of them. There are a couple of monthly dividend payers in this pie in the form of the JEIP, JEGP, JEQP, and Main. Hopefully, as my positions in each of them increase, the dividends should start to help compound. I'll run through the dividends for this month in a few minutes, or skip to that section using the timestamps in the description if you'd like to know now. Moving on now to what I like to think of as the moonshots. These are the stocks that I believe might go the distance, or at least make the ride interesting. These are stocks that I think could 10x, as the pros put it. Now, I don't think any of these stocks pay out a dividend, which is why they are in the EI income pie. But as you can see, Palantir far and away has outperformed every other investment I have at the moment. I managed to get in at the right time and have just under 2 shares with an unrealised profit of almost £100. As a stock, it's up almost 10% for the month, I believe. Yeah, they were at 9.94%, which is awesome. This stock just continues to grow. If you haven't looked into it yet, it's worth doing, as I still feel it has room to grow. The next 2 stocks that appear to be doing well are Rigetti Computing and Cooler Technology. Rigetti is up 37% for the month, or almost 37% for the month, and 38% in total for me. It's a quantum computing company, and I'm holding for the next, hopefully, 3 to 5 years, as I expect quantum computing to be the next tech boom. As for Cooler, we can see it's actually down, I think, 8% for the month. Yep, 8%, bang on. But it is up 47% overall for me. This is another stock that I think has potential to grow like Palantir. So hopefully the loss over the last month is just a dip. The rest are all in the red at the moment to varying degrees, but I'm hopeful of growth from all of them in the long run. Nintendo is one I'm expecting growth from in the next 12 to 18 months, particularly with the Nintendo Switch due for release on June 5th. The stock increased by about 100% within the first 12 months of the original Switch console release, and I'm hoping that the stock price will follow a similar pattern again. I feel it's important to note, though, that none of these stocks are for the faint of heart. Do I expect volatility? Absolutely. But even if one of them pops off in the next 3 to 5 years, it could make a big impact on a small portfolio like this. And that's kind of what I'm hoping for. Lastly, I have a recently required small holding in SMIF for that extra monthly income bump. It's not flashy, but it's like finding spare change in the sofa. This month was the first payout I received from it, which was a whopping 11 pence. This is another asset that I intend to continue to buy month on month, so this payout should increase. So now if we go and have a look at the dividends for the month, I know you're all thinking finally, it's not been a huge month for dividends. We can see it started with SMIF back on the 6th of May with that 11 pence. I got my first payout from the JP Morgan equity funds, which were all relatively small, but should continue to increase month on month as I increase my positions with each of them. All 3 funds are currently in the red for me, which is an excellent opportunity to pound cost average. I also got a payout from British American Tobacco as well, which pays out quarterly. The next dividend is due in August, and I again expect to add to my position with BATS. So the next dividend should increase. The last dividend I received was on the 15th from Main Street Capital, which was a whopping 0.04 pence. Now that is an increase of 33% from last month's dividend. Now we can all agree that 33% increase sounds a lot better than 4 pence. Again, this dividend should continue to steadily increase as I improve my position. Admittedly though, May is not one of the months with the best projected dividend payments, so hopefully next month we should see payouts from EQQQ, BAE Systems, Legal & General, and finally Unilever, as well as the usual monthly dividend payouts. In summary then, the portfolio is going in the right direction, despite recent market volatility. The total dividends for the month are a staggering 41 pence, which is the second highest month for dividends I've received to date. This includes the interest on uninvested cash as well. The total unrealized profit is showing just under 10% as we hit 11 months of my investment journey. I'm not anticipating any major additions to the portfolio in the next 6 months, as I think it's reasonably diversified. It's dividendy, which isn't a word, and just slightly daring with those individual stock choices. So let me know in the comments if you'd like to see a video breaking down the investment choices I've made. And of course, if you've enjoyed this little ramble through my portfolio, feel free to give it a thumbs up or subscribe to the channel for future portfolio updates. That's it for this video, and good luck on your investing journey.